Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Tim McCourt, Global Head of Financial and OTC Products, as well at CME Group, as well as Mark Marex, Senior Director of Index Research and Development at Nasdaq Investment Intelligence. They join us to discuss Nasdaq 100 performance and drivers and innovation behind Nasdaq 100 products. Tim and Mark, it is great to see you as always. Welcome back to the show. And Tim, provide us a high-level overview. How do two exchanges partner up when it comes to product?
Yeah, that's a great question, Jill. And Nasdaq and CME have a multiple decade partnership and long-standing relationship, which at first it may seem a little odd that you have two different exchanges partnering together to serve the financial community, but it makes a ton of sense when you look at what both CME Group and Nasdaq are really good at. And combining those strengths for the market participants is a secret to our success. So when you look at Nasdaq focusing on running the underlying cash equity markets, the capital formation, the IPO process, and then wrapping all that together into a global benchmark such as the Nasdaq 100, partnering that with CME's ability to build liquidity, unlock capital efficiencies in the derivatives markets, the futures markets, the options on futures market. Just combining those leadership positions is something that's really powerful and has served the community for decades and you know, hopefully decades to come as well.
And certainly. And Mark, why don't you give us an update on what's happened with the Nasdaq 100 as far as year performance, the major drivers, you know, what you've seen that's similar and different over the past year?
Yeah, sure, Jill. Great to be here. And I mean, what we've seen from the Nasdaq 100 this year is a really strong start, which I think maybe would have surprised some folks after last year's performance, which was really historic. Index was up over 50%, best year since 1999. Obviously powered by the generative AI kind of new secular growth driver, not just for some of the biggest names in the index, but a lot of the smaller names as well. The expectation, I think, heading into this year was that you were going to see a broadening out of that rally. And we've seen that to some respect. And what we've seen is, you know, within the Mag 7 or Elite 8 or whatever you want to call them, a lot more dispersion than 2023. You've seen Apple struggling in terms of trying to convince investors that it's going to be able to ride the AI wave profitably and meaningfully the way that, you know, the Amazons and Googles and Microsoft kind of demonstrated last year. Tesla's also been struggling, right? Apple and Tesla together, you know, from a fundamental perspective, they haven't been as strong in earnings and revenue growth. They haven't been as strong in the guidance. So you've seen some performance dispersion there. But all in all, I mean, we're just over 4 months into the year. The index is up a little over 8%. The broader market with the S&P 500 is up about 9.5%. So I would say still overall a pretty strong first half of the year, especially, you know, after what we saw last year, which was historic.
Yeah, it really was quite remarkable. So Tim, tell us what you've been seeing this year in terms of Nasdaq 100 futures trading activity. It's been a momentous year for CME and the Nasdaq 100 with a few major anniversaries.
That's right. It's hard to believe. It was actually 5 years ago. Earlier this month, we were here at that market site celebrating the launch of the Micro E-mini contracts at CME across the 4 major equity index benchmarks. And that's gone on to be one of the most successful product launches in CME Group's history. Since launch, those contracts have done over 2.5 billion contracts of volume, which is phenomenal when you think about it. And it really speaks, I think, to what we're seeing in the marketplace. And that is the marketplace wants more precision in their risk management. They want easier to access trading vehicles. And when you look, to Mark's point, at some of the index divergence that we've seen over not just the last few months, but even going back to 2019, 2020, a theme we keep on coming back to is index choice matters for participants. So it's not surprising, even when you look specifically at the Nasdaq 100 complex for micros, this year in 2024, they're leading the pack, doing over 1.2 million contracts a day, where you have S&P doing, you know, a little over 800,000, and then Dow and Russell doing about 100,000 contracts per day each, which typically, you know, is maybe more of an even split between S&P and Nasdaq. And I think it just reinforces this point that Mark has made. When you look at that index choice, there is a materially divergent expression of risk and access to the market between S&P and Nasdaq, given the concentration in some of those names like the Magnificent Seven or the Fab Five or whatever else we want to go with in terms of the monikers. And it really speaks to the enthusiasm for those products and names of companies that people are familiar with. So it's not surprising in this market with that gravitational pull towards those larger cap names in the Nasdaq 100 that the micro Nasdaq contract is keeping suit in terms of increasing popularity and utility for customers. It's also something we're seeing in some of the other interrelated products, like the Q ETF is also continuing to be an enormous, contribution to the market ecosystem. Futures are continuing sort of a long-standing tradition of maybe like out trading in terms of the ETFs on a daily basis in risk terms, but it's great to see that's a growth versus growth story for the ecosystem, continuing the trend of retail traders becoming more and more important in this market the last several years. But what's also fantastic from my standpoint to look at is if you look at the older sibling to the micro Nasdaq, the Nasdaq 100 E-mini contract, also celebrating a 25th anniversary this year on June 21st, and that's having a continued growth story over the years. I think the first year it was back on Globex in 1999, I traded 2,000 to 3,000 contracts per day, which was an enormous success. Right now in 2024, it's trading almost between 700 and 800,000 contracts a day. That's a phenomenal growth story, and I think is really a great snapshot into the successful origin story of how Nasdaq 100 has become even more and more important alongside all those other equity index benchmarks that maybe are a little bit older. Nasdaq has certainly risen the ranks in terms of its prominence in the marketplace and its importance in people's risk management tools.
Yeah, I remember when you launched it 5 years ago on the show, and I remember part of the narrative being that the E-mini futures give more exposure to the retail investor, and we've certainly seen their participation over the past 5 years. So, great timing on that part. And Mark, back to you. What are you seeing on your end in terms of flows into the QQQ and other ETFs that track the Nasdaq 100?
Yeah, thanks, Jill. I'll just add to that. Very funny. I realized my first day at Nasdaq was 5 years ago on the exact date of the launch of those micros. So that is also going to be in a special place in my heart, in my mind for many years to come. I kind of had no idea coming to Nasdaq and starting with the index group 5 years ago, just how big and broad the reach of something like the Nasdaq 100 can be. Tim mentioned the Qs, which is probably the best known ETF product that tracks the Nasdaq 100 index. Recently celebrated its 25th anniversary, crossed 250 billion in AUM for the first time a few months ago, is now around 260. We've got about 80 exchange-traded funds trading all across the world that track the Nasdaq 100 index directly, with over 360 billion in assets under management across all 80 funds. It's been a very strong year, I think, not surprisingly in terms of inflows, given how well the index performed last year, to see on the order of about 27 billion of inflows over the last 12 months. January alone was about 14 billion. Most of that was the older QQQ and the newer QQQM ETF from Invesco that also tracks the Nasdaq 100. We have a ton of derivations too of the Nasdaq 100 that have, for example, embedded options overlay strategies. Whether it's something like, Q Yield, which has been around for over 10 years, over $8 billion of AUM with a covered call strategy, or the newer JEPQ product, which is actively managed, covered calls from JP Morgan that's been around for, I think, just over 2 years and is already up to 12 billion in AUM. There are a ton of other products that we've been recently launching. I think as part of this trend to a more engaged, more sophisticated retail investor, whether they're looking at the micro E-minis or whether they're looking at, defined outcome ETFs that give them buffered exposure to the Nasdaq 100 or give them an income boost with, an options overlay, whether it's selling calls, selling puts. We're seeing, this year, on average, I'd say on the order of about one new launch per month from the likes of Neos, ProShares, Defiance, all launching ETFs to give investors that sort of basic exposure to the Nasdaq 100, but with something else on top of it. And I think that speaks, again, and Tim really nailed it, to the success of this index over the past couple of decades, growing into something that is more than just a niche kind of tech sector exposure that people used to think of, to now, it's about half the market cap of the S&P 500. It's a very, very meaningful part of the overall equity market in the US. It continues to gain on the S&P because it's driven by that fundamental strength of things like earnings, revenues growing at 2 times the rate of the broader market. And we see kind of no reason for that to slow down anytime soon, because we've seen technology really kind of touch every corner of the economy, especially the last few years since COVID. Innovation is sort of taking center stage and sort of driving economic growth these days.
Yeah, it certainly is. And as an outsider looking in, having covered your group for the past 7 years, the innovative work that your team does with index development and the amount of indexes that you are creating every year is just fascinating. Tim, we've talked a lot about futures tracking the index. What other products are investors using to gain or hedge exposure to the Nasdaq 100?
Yes, certainly. Alongside this increasing volume that we've seen across the complex, where doing over 7.6 million contracts across all the equity futures and options at CME, it's something that it's that product mix that really is also further accelerating not only the individual trading strategies, but the risk management. And when we look at these uncertain times, whether it's geopolitical or macroeconomic, or sort of maybe idiosyncratic by any certain name that people may be looking to hedge with a highly correlated index, it really is introducing more and more risk management, and we've certainly seen that with options. I think options on futures at CME Group remains a very strong growth story. And when we look at equity index options at CME, having a sort of a record year here, trading more than 1.7 million contracts per day in options across the complex. But even Nasdaq is now doing almost 100,000 contracts per day on the option front as part of that mix, and that's come a really long way over the last few years. For just a few years, it was closer to say 10,000. So that it's that increased utilization, but it's not surprising when you're looking at the backdrop of how people are trading. They're looking to manage more risk. They're looking to use options as a way to hedge some core exposures, whether it's in ETFs, single stocks, futures. Options are a great hedge vehicle, and some are also deploying very specific option strategies, as they sort of the way we kind of think of it in the future, that they've kind of graduated from other parts of the ecosystem, specifically that sophisticated active individual trader that Mark was talking about, where they're maybe familiar with single stock options, familiar with ETF options. They're making now that step to options on futures at CME because they're already trading the futures, right? So sort of this tool that goes alongside that delivers that underlying is a great feature. And even though, to Mark's point, the Nasdaq is a great global benchmark that's focused on the U.S. economy, it's a global trading vehicle. We're continuing to see outsized growth outside of the U.S. from a trading hour perspective. Almost 500,000 micros per day are across all four are trading outside the U.S. from a trading hour perspective. We look at the participation. It's very diversified in terms of segments as well as region across the globe. And what we're seeing is, as people get familiar with the E-mini, the micro E-mini, the Nasdaq options, they're now adopting all the other sort of varietal of products that we have similar to the other indices, whether they're dividend futures, options on dividend futures, total return futures that mimic the swap payouts. All of these things are great growth drivers for the Nasdaq because they're already trading similar strategies to the point, whether it's in S&P or other global benchmarks, and now they're just rounding out their access and exposure and risk management to Nasdaq, which is a great trend to see, and certainly was a story that we're looking to have continue in 2024 and beyond.
Appreciate the insight as always, Tim and Mark. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.